In this video, we look at the performance of metals and equities in the recent market crash. While most of the major equity markets have recovered from the recent market crash, the movements were representative of a shift towards more defensive assets and away from risk that had already been ongoing for most of the year, but was put into overdrive, and even given the recovery, we expect that this broader trend will continue. While most major metals did outperform in the crash, the safe haven gold clearly stood out versus aluminum, copper, and iron ore, which are more cyclical and driven by shifts in global industrial growth. For equities, the classic defensive sector utilities actually rose and far outperformed the rest of the markets and gold, while the S&P 500 and US tech declined, and Japan was hit hard by an unwinding carry trade, and the Russell 2000 small cap index by the shift to risk off. The large producing gold stocks declined moderately, but still significantly outperformed all the major indices. The GDXJ ETF of gold juniors was nearly even with the US tech sector. MSCI Global Mining declined mainly because of its high exposure to the drop in iron ore, and TSXV mining dropped given the very high risk of the pre-revenue microcaps that make up the index, although it still outperformed the small caps overall. For more information on metals and mining stocks, click the link in the description or bio below to go to www.canadianminingreport.com. Canadian Mining Report is not a financial advisor. This video is for informational purposes only and does not constitute investment advice.